Good morning, everyone. Welcome to the InsureTalk edition, April 2023. My name is Christelle Coleman, and today we are coming to you live from Cape Town, the mother city. It's a special day today because I mentioned the date for a specific reason. It's also our birthday edition. 3 years of InsureTalk, thousands of people coming together every month to learn, to grow, and to collaborate through these sessions. So today's a special edition, as I mentioned, and I was reflecting on birthdays because it's also my birthday week. So I had some time to think about this. And it's very interesting about birthdays in the modern day, the day of social media, the time of social media, because we get wished by hundreds of people on social media platforms. And for me, it's become a day not of wishing the birthday, but of connecting with people. And that's why this edition today is pretty special. We're going to make it a bit interesting and different from our normal sessions, and you'll see as we go through the show today what I'm talking about. But as always, these InsureTalk sessions are not possible without our sponsors. And our headline sponsor for today is Lombard Insurance Company. I'm a little bit biased because Lombard is a shareholder in AMI, the company that I work for, and is also our risk carrier. So we would like to thank Lombard for supporting this wonderful industry initiative, InsureTalk. Our conference theme today is one of great interest to me. So we have today ensuring a better tomorrow, embracing innovation and responsibility. And we hear about innovation all the time, but it was very interesting to me that Lombard chose to put innovation and responsibility into the same sentence. We are going to discover how the insurance industry is evolving to meet the challenges of tomorrow by embracing innovative solutions like ChatGPT. We're all talking about ChatGPT at the moment, and addressing critical issues such as ESG, solar power, and commercial crime. We've got a fantastic panel of speakers today. I really mean it when I say it. And we're starting with our first speaker in a few minutes. Up first, we have Greg Smith. Greg is the managing director of one of the Lombard specialist companies, Commercial Crime Concepts. I've known Greg for a long time. He began his career in the insurance industry in 1987 when there were no computers in the office. We can all relate to that. Many of us can relate to that. And messages were sent by post or telex, and was surprised by the request to discuss issues regarding the digital age. He has specialized in commercial crime insurance for 27 years. Greg, I'm really interested to hear what you have to tell us today and what you have to share with us. So over to you, Greg.
Thanks, Christelle. Am I being heard, guys? If someone can just give me a thumbs up or something. I'm just going to share the screen quickly. Good morning, by the way, and thank you for joining us. You see when the bunnies try and get the screens going, this is where it gets interesting. Okay, sharing. How's that looking, everyone? Can we see it? All right. I hope I'm being seen and heard. Right, yeah, so good morning. Thanks for joining us. Yeah, and we're talking about commercial crime in the digital age, even if it is the digital age without electricity. A very specific issue you might have in this country anyway. Yeah, so I come from that generation where, yeah, we saw the internet not really come in with a bang, but rather quite slowly with this sound. I don't know if, well, you can hear it. Oh, I can't listen anymore. What a horror show. And yeah, as Baileys, and we saw this happening, you know, we'd try and get on the internet, that noise would happen, then we would have to type in our address for the World Wide Web. And because men didn't know how to type in those days, that took quite a long time. And then you sat and you watched this hourglass type icon doing nothing, and watching a one-page website load very slowly for half an hour. And that essentially was just a sort of advert. You couldn't really do anything with it. So I remember thinking, yeah, this is not going to work. Something's got to change if this is going to make any sense. And yeah, lots has changed, including the world. And we find ourselves here today, you know, in the digital age with all its convenience and knowledge, but also plagued by quite a lot of risk. And that's what we're going to deal with today. So I thought I would start with maybe defining what we mean by the digital age. So as one does, one Googles it, and this is what I got. The first one, obviously you get many different variations, so I just went for the first one. And yeah, we told, sorry, the digital age is characterized by technology, which increases the speed and breadth of knowledge turnover, and I think that's fair, and then it's within the economy and society. So yeah, I mean, I agree with that. There's lots of knowledge is at our fingertips. The economy has changed. You know, we talk about the Internet of Things these days, but it's really more about the movement of money. If you think about, you're probably going to hear my dog barking in a few minutes when my Take-A-Lot order arrives. You know, the goods still arrive by car, by truck, by wagon. And it's really more about the movement of that money. We're going to deal with those two issues, you know, the knowledge bit, we'll sort of deal with, we'll look at cybercrime and that sort of thing. And the economy, I just thought I was being told that no one could hear me, but that's fine. And then the movement of money, you know, as checks have replaced EFTs, and with that comes special challenges. And then, of course, this access of information, you know, whilst it's very convenient and useful, we have connections to, you know, more bad people have connections to our information as well. And we need to find ways of dealing with that risk. So then I thought I'd carry on Googling, because you know, the term commercial crime, not in terms of insurance, but the actual concept of it is, I mean, no one really knows what that is. You know, it's a very wide term. So this is what Google gave me. It said, defined as financially motivated, non-violent crime committed by business and government professionals. Government professionals, I don't think that's a thing. But business, yes, but they don't mention, you know, employee theft and fraud, actual individual criminals, criminal syndicates. So I don't buy that. I don't buy that definition. I think essentially we have to define it in terms of our own environment and our own, you know, where we are operating. And hence, you know, in trying to design commercial crime insurance, you know, we design it towards, you know, what we're seeing in our market, and not necessarily towards that, you know, that definition. And also bearing in mind, I won't be addressing anything to do with social media today, because that's an entirely different and a little bit, you know, serious risk out there with that. And then, you know, I thought it might be fun to see what Google thought commercial crime insurance was. And let's see how well they did. They came up with dishonest, fraudulent, or criminal acts of any employee, which resulted in a loss to the insured. Yes. Resulting in proper personal gain for said employee. No, that's wrong. That goes back to the old fidelity guarantee days. So we don't require that these days, just an intention for that employee to steal. Physical loss of, yes, property, or damage to, perhaps not really. Theft of funds from the insured's transfer account, yes, it's covered. Theft of property by computer fraud. So they kind of got we'll give them 60% for that. But really, the nuts and bolts of commercial crime insurance is the theft of money or property by employees, or by computer fraud by any party. We'll go into it in a bit more detail now. All right. Right, so when discussing commercial crime in the digital age, we look at two categories. As I mentioned, cybercrime, or the theft of money, and the theft of money or property by employees, or computer fraud by any other party. So I think also, please be aware that when I'm referring to commercial crime insurance for the, you know, the purposes of this discussion, I'm referring to what I would consider to be a generic type product. These policies are all quite different. There's a number of variations out there. And some of the things that I'll be dealing with might be not necessarily correct for a specific product, but this is generally what you expect from the market. Right. Okay, so does commercial crime insurance meet the challenges presented by cybercrime? Yeah, no, that's an easy answer. Yes, no, sort of, maybe, sometimes. All of the above, really. And yeah, it's a wide business, and there's many things to consider. So I'm going to break it down into what I think are the four main ones that we're seeing. We'll start with a yes, which is good. So when we're discussing actual theft, which is perpetrated as a result of a cyber breach, so someone, you know, entering your system, and where it's a direct financial loss, then yes, that is covered. And I can give you an example of that. an actual claim we had where criminals accessed the computer system of a payroll company. They managed to change the banking details of all the employees on that payroll run. And when that payroll went off, they made off with quite a lot of money. So that loss was covered. And it actually turned out in the end that it was due to an ex-employee who left a back door into that system, and it wouldn't even have been covered under the computer fraud necessarily because it was an employee dishonesty issue as well. So we can, I think what you need to focus on there is direct financial loss, not indirect or liability and that sort of thing. Sorry. So just be careful of that too. It's not, there are some conditions, and one of the issues you may find is a phishing exclusion. So where passwords and pins and that sort of thing might have been provided to the criminals voluntarily by the insured, you may fall foul of a phishing exclusion, although we haven't seen those. Quite hard to us sometimes work out, how those criminals got in. So then if we look at the, when we discuss cybercrime these days, I think it's sort of evolved into really ransomware. That's what we have on our minds when we talk about cybercrime. It's that lovely situation where you're working one day and a big message comes up on your screen saying, hello, my name's Bob. We have got your data. We have access to it. And unless you pay us lots of Bitcoin within a certain amount of time, we are going to destroy your data, or perhaps even more worryingly, sell your data on the dark web or some such thing. And then you need to, go from there. So those are what we would consider to be an indirect or consequential loss: the act of paying the ransom, the cost of negotiating with the criminals, perhaps, from a POPI perspective, the liability issues you're going to face there, the regulatory issues, fines, penalties, etc. All those things are not covered by a commercial crime policy. And, if anything, as cyber has evolved, commercial crime underwriters have balked at covering it, and we have the evolution of proper cyber insurance underwriters, proper cyber policies, which are very complex and comprehensive. And we find, that's where those risks are best placed and covered. So there are solutions out there, but you're not going to get it from a commercial crime policy. Something we see a lot of these days is the impersonation fraud. That's our term for it. It's also known as social engineering and fake president's clause, etc., etc. But essentially, that's where someone is looking to, or not looking, where they impersonate perhaps a supplier or some other creditor. It could be your boss, could even be a colleague, and ask you to change their banking details or to pay a certain invoice, and they supply the invoice with fake banking details. And you end up paying the wrong person. And we see that's a very rife thing at the moment. And the answer to whether that is covered is sort of. I know it's not very satisfactory, but essentially we weren't covering that. And then we were asked by certain brokers to consider a wording which had come out of, I think, Europe. And we agreed to write it, but we write it as an extension mainly. Although we do write a little bit of standalone on the cover of this for example, attorneys, conveyancing attorneys, that sort of thing. So I say sort of because it's got very penal home insurance provisions if certain checks are not conducted in the case, whilst one's making these payments. And they're not that onerous. They're kind of common sense, but frankly, these frauds are getting really quite good. So we don't, it's quite easy to get hoodwinked. But essentially, you've got to check who you pay, and you need to check properly. So what we see a lot is, someone received an email saying, "Hi, it's Spit. We've changed our banking details. Won't you? Here's the new stuff. Won't you do, next payment? Won't you pay this account?" And what people do then is they reply to that email and say, "Pete, is this you? Are you sure your banking details have changed?" And what you're really doing is you're asking the crook if he's a crook, and that doesn't work. So what the policy says you must do is you must check that you need to open a new email chain using contact details not from that communication you received from an independent source, and then you check via those means. or phone, and that's what we prefer to do. We will always phone any new person or entity we need to pay, or if anyone asks us to change banking details. Listen, anyone changing banking details is a massive red flag. So you need to be extremely careful about that sort of thing. If you don't do that, I'm afraid you're only going to get between 25% and 35% of your claim paid. It's better than nothing, but you are going to be, as the insured, facing the bigger part of that loss. So hence the sort of. Even on that basis, and we make people very aware of those provisions. We sell quite a lot of that. So it's certainly something. It's a part of a solution, but that's the best we can do in that environment for now. And then lastly, business identity theft. That's more of a liability type thing. We don't do that, but you do see that on some policies out there, commercial crime policies. So the answer there is sometimes. And that's essentially where someone's conducting business in your name, or perhaps getting loans, etc., and you incurring liability as the result of actions from those people. So I'd love to give you a nice, simple answer, but I'm afraid that's the best I can do. Okay, so in terms of the second issue that we are discussing today, which is the movement of money via the internet. Yeah, so we do cover that, but there are rules as well, as always. And so EFTs, yes, that's probably the biggest form of loss you're going to see out there in our world, commercial crime world these days. So yes, that is covered, but just as back in the day when we were dealing with check fraud, we always required checks to have 2 signatories. These days, we require there to be dual authority on EFTs. And whilst we used to deal with that by means of a proposal form and ask people if they do that, we found very often they didn't. And then there was big surprises when we didn't want to pay the claim. So what you'll find quite standard these days is an EFT exclusion. And basically, if you are allowing an employee to just put money in their own account on their own without any other authorization, you're going to fall foul of that exclusion. I might have to go a little bit fast because I'm running out of time. So be aware of that. Please be aware. If there's one thing you take away from this chat today is, unfortunately, banks, in order to try and be helpful, they have what's called an ad hoc payment facility. So whilst you think you have these dual authorities on your payment platform, you're allowed to bypass these because companies sometimes don't have enough signatories in the office at any given time. And this ad hoc facility allows all the controls to be bypassed and allows an employee to pay a claim. And when I say just not a claim, sorry, to load a beneficiary and load and release and authorize payments. And we actually had that on ours. We didn't even know it, and we had to have it disabled. So please check that out. Your claims will be rejected if you do not have dual authority. Cell phone banking apps, we're seeing that more and more. Yeah, we don't like that because, again, if you're going to allow an employee to have your business banking on his cell phone, his or her cell phone, there's no dual authority there. They're just moving money around on their own. So that'll be problematic. Same thing with credit cards. And I know this isn't digital era, but there's a lot of cash still floating around our economy. We see a lot of cash claims, almost always due to lax controls. I mean, for example, we see, in the hotel industry, I didn't realize how much cash flowed through those hotels. We're seeing a lot of claims in that environment at the moment. Same thing. You just need 2 people dealing with it. You can't have one guy collecting the cash and then counting it, banking it, reconciling the bank accounts, and expect not to have him help himself to some of that cash. So yes, we cover all those. We cover the movement of money, but there's rules, and please be careful with that ad hoc payment facility on banking platforms. Okay, so then, has there been any evolution, in the commercial crime market over these years? Well, perhaps to give you context, before we talk about evolution, the market has evolved in a poor way. It's considered to be a distressed class of business, commercial crime. We're in a very hard market. I feel sorry for a lot of you brokers out there trying to place commercial crime risks. I mean, we probably declining half of what's being offered to us at this point in time. And I know there's a lot of businesses that are going uninsured, but yeah, hopefully our economy will improve. That's where the problem really lies. In a poor economy, commercial crime losses generally pick up a lot. And that's due to many things. I mean, people are desperate. They will steal. You actually can't really blame them for that. You have people being retrenched, and when they know that's going to happen, they steal. There's just desperation out there, so we expect that. But then you need to have your controls, in place, and that we don't have very often. So that's a problem. We have a very ineffective justice system. It's nice to see some movement in the NPA getting some resources back, but on the ground, down to the constables working in the police stations, where you go and lodge your criminal matter. Those guys are under-skilled, under-resourced, right through to the bottom, getting those cases properly investigated and then into the prosecutor's office, almost impossible these days. So there's very little deterrent for people to steal. And then, of course, you got, like I said, lots of generally poor controls. I think businesses are focusing these days on survival, and they let things slide on the control side. As I mentioned earlier, the commercial crime has separated from the cyber market. We're not looking to underwrite cyber insurance, and it's nice to see proper professionals doing that. So you need to go over to that side if you want to find solutions to those risks. What evolution has happened besides the cyber market is that, one of the things we did when we launched was we introduced a franchise as opposed to a conventional deductible. For those of you who may not know, if a loss is below the deductible on a policy, the policy doesn't respond. It's the same with a franchise. When the loss exceeds the deductible, the claim is reduced by the amount of that deductible. It's deducted. With a franchise, that falls away completely and the claim gets paid from the ground up. So we still do quite a bit of that, but we're doing less in this hard market, although a lot of our existing business still sits on that basis. We also introduced free employee screening years ago because we see so many claims where our clients employ crooks without checking who they are. A lot of that at the moment. Our record at the moment is, I think, 6 convictions. The guy was employed, drug dealing, drug possession, 4 fraud matters. We had one recently where we had a claim, paid the claim. Our investigators tracked the crook down. He was working for another one of our clients. They had actually screened him, and somehow his 3 convictions hadn't come up. And these guys all started stealing immediately when they got their new jobs. It's probably got another job now as we speak. I'm going to speak fast because I'm running out of time. So you'll see business identity theft extensions, which we discussed. You'll see legal assist, and you'll see comprehensive crime policies, which are interesting. Generally, those are broker wordings where they've made an agreement with an insurer to underwrite those. We're a bit scared of that, so we don't do it. But essentially, they're wider commercial crime, and they bring some of the accident miscellaneous classes into play, some property damage, that sort of thing, and a wider sort of provision in terms of stock and those sorts of things. So yeah, with a minute or two to spare, people do always like us when we do presentations to discuss some of the current trends we're seeing from the claims that we get. And interestingly, I don't think the digital age has had too much of an effect on that, except for that EFT side. Stock theft still massive out there, obviously. We see, it's quite hard, particularly if you have desirable stock to prevent that. So there's always, we're always going to have that, and that's fine. That's what commercial crime insurance is there for. However, be careful. There's fairly standard exclusion on policies now. What we have to prevent happening these days is, finding what happens. The insured sometimes finds an employee pilfering some minor item or two. They then look at their stock takes over the past 5 years and assume that it was that employee who stole 10 million rands worth of stock over 5 years. We don't accept that. Essentially, the stock take exclusion says you must show that your losses are due to that employee or a bunch of employees working in collusion. You can't just do a stock take and expect, all your shrinkage and stock losses over years to be, accumulated and put onto that claim. So That's, yeah, it's been around a year or two. EFT fraud and theft. Yes, as we've said, it's evolved from check fraud, but be careful of dual authority warranties. That's massive out there, and almost always the claims are happening because there's no controls. Cash theft, as I've mentioned, that's very big at the moment. Again, because of controls not being in place, and that's really not hard to control. So just general reconciliations done by different people. It's my order from Takealot. The internet's working. Impersonation fraud, yes, that's some of us do it, but we see that a lot, and only a small percentage of our clients actually buy that. So whilst we see loads of claims being lodged for that, most of our clients have not bought that extension, and yeah, they are having to face those risks themselves. Lastly, I think something to discuss, procurement corruption. Obviously, we see that in government, but please be aware it happens in the private sector as well. And very often it's not covered because it's consequential loss. You know, what happens is an employee takes a kickback, so they use a certain supplier. Our client comes back and they want to now claim for that kickback, saying it's their money. It's not their money because it wasn't paid by them. They then expect to claim for what they think, you know, they should have bought that, let's call it the stock at a lower price than what they had bought it for. And again, that's consequential loss. And even then, if you dig deeper there sometimes, you know, if you've paid more for your base product on wholesale price, but you're still applying your normal markup, you're actually making more money, aren't you? You know, because your markup's on a bigger amount. So that will generally not be covered. And if your client's coming to you to buy commercial crime insurance for that type of exposure, I think you just need to make it clear up front that that's not going to be the case. Right, so I think I'm on 10:32. Guys, thank you for listening to me. I'm sorry I've gone a bit over. I believe we don't have time for questions, but you know where we are, and please give us a shout if you ever have any specific questions. Thanks.
Thanks, Greg. That was very insightful. Actually, I should have asked you before we started with your chat was what exactly is a telex? We had an argument, I would say, discussion about this the other night over a glass of wine at a braai, and we couldn't really remember what a telex was. So you should share that with us. But fascinating how times have changed in the digital age and how commercial crime has been impacted by that. So we really appreciate you sharing your insights here with us today. I mentioned Lombard is our sponsor today. I think it's just important that we talk a little bit about this company. What an incredible South African success story it is. Started in the 1990s, an independently held short-term insurer. Lombard is a specialist insurer by, known by most in the market, with a number of specialist UMAs in our stable and working what we would call mostly in the scheme business environment on the commercial side. It's a fantastic business to be part of, and I would really like to thank them for supporting us here today at InsureTalk. So the next speaker is another Lombard individual representing the Lombard brand. It's Chris Charlton. He's the managing director of Consort. Consort is one of these companies that when I go out into the market and I say we are part of the Lombard stable, I always hear wonderful things about Consort. Chris has been in the industry since the early 2000s, having grown up in an insurance family. It's interesting how often we hear that in our industry. And he didn't seem to have much choice coming out of university. He was appointed managing director of Consort already in 2017. He's passionate about the ever-changing landscape of insurance, and especially the engineering insurance space, welcoming the opportunities this presents. So we look forward to your talk today this morning. Thank you, Chris.
Thank you, Christelle, and morning, everybody. Firstly, I want to start off by saying what an absolute privilege it is for me to be on InsureTalk31 and on their birthday edition. So happy birthday from my side, and I wish you many more. It's not often that we get an insurance-specific conference where we can share knowledge and hone our craft in such a platform as this. So it really is a privilege for me to be on it. I'm going to share my screen. Hopefully it works. It worked in the demo. So go. Great. So I will be speaking this morning around the future of underwriting, technology, and data trends shifting the insurance landscape. Now, this is a massive topic, and it is as deep as it is wide. We're all familiar with the science fiction depiction of the future, flying cars, robot butlers, and the all-important flux capacitor allowing Marty McFly to time travel. But in all seriousness, we are living in an age of massive technological advancements, and these advancements will fundamentally change the way we live our lives. What we once thought was impossible is now reality, and the advancement of technology is just continuing. Insurance has had its part to play and will have its part to play well into the future, as it has since 1347. It's where the first record of insurance contract was discovered in Genoa. But it's going to look different, and it's going to be conducted very differently. My intention is today to spark a little bit of a curiosity around some of the technology trends that are actually reality now, and how we can think of them in an insurance context and application. One thing is for certain, though, is if we don't adapt, we will be left behind. So I want to start off with Amara's Law. And Amara's Law, Roy Amara was a futurist, born in 1925. So he had a fair amount of future ahead of him, where we sit now. But he said we tend to overestimate the effect of technology in the short term and underestimate its effect in the long term. So as we go through the presentation today, I want to keep that in mind. You know, we think that the impact is going to be massive today and massive tomorrow, but then it's not going to be too big going forward. But we need to kind of think that this technology advancement is a journey, and it builds on itself. So with that, and I trust you don't get too motion sickness with my choice of slide presentation. There's a little bit jumpy aroundy, but it does help with telling a story. So I want to set a bit of foundational kind of knowledge. We're going to start off looking at data and then algorithms, but just so that we're all on the same page, I'm going to start with data. And data comes from the Latin word datum. It's actually the plural of the Latin word datum, and it roughly means a thing given. So it's basically a set of outcomes that provides information. The data could be in the form of qualitative or quantitative, and it gives us a description and information around quality, quantity, and facts. Data itself has progressed quite drastically over the industrial revolutions. It was descriptive, so it told us what's happening. It then moved to explanative, which speaks to why did it happen, and it's now moving to predictive, and it helps us understand what's going to happen. And it has become a valuable resource to business, insurance included. In the insurance space, we're seeing data being used to enhance product offerings, refine risk profiles, create more efficient processes, drive customer engagement, and predict future claim events. Apologies, I did not start my timer, so let me just start that now, because I know we are tight on time. So that moves us over to algorithms. Data itself doesn't hold much value. It's how it's used that creates the differential. So years ago, whilst I was engaging with a telematics device provider, I was given a very sound piece of advice. I was told that in the very near future, everyone's going to have the ability to gather data. It's what you do with it that counts. And that's where algorithms and artificial intelligence come in. Algorithms are basically a set of equations and instructions that are put together to provide instructions as to how to interpret and use data. That seems simple enough. And I think at this point, the technologists on the screen are kind of, or on the call are hanging their heads and shaking them at me. And, you know, as complicated as the background workings may be around algorithms and data, we don't have to understand them in order to use them and make and create some value from them. So we all walk around with a smartphone in our wallet, in our pocket. Not many of us understand how they work, but we still are able to extract a large amount of value from them. So this brings me to our first trend that we want to discuss, and that's artificial intelligence. Artificial intelligence, specifically low code or no code AI, is gaining a massive amount of momentum and speed of implementation. So to begin with, artificial intelligence is a branch of computer science, and it is the augmenting of human intelligence with a computer system, to put it simply. So this augmenting of human intelligence with computer systems is taking tasks and processes that were usually done by humans and distilling them down into algorithms that have that ingest data inputs and produce decisions and outputs. Low code or no code AI aims to make applications or AI applications even more accessible and user friendly to people with very little or no computer science knowledge. So low code, no code AI has been developed so that people can start to design and use custom applications with the power of built-in AI. Insurance companies particularly are starting to turn to no code AI to increase their implementation time, the speed of implementation, and to extract some of the power that AI has presented to them. So, for example, in the insurance industry, an insurance case for low code, no code AI, or just artificial intelligence in itself, just a very simple example is around renewals. So no code AI can automatically generate and gather the claims experience and the data and the underwriting data, which has been gathered or provided over the course of the insurance period. It then formulates the premium. It creates and provides insights to the insurer that previously may not have been looked at or may have been overlooked previously, and then automatically sends and transmits the documentation to the insured. This is clearly setting up and freeing up the underwriter to concentrate on more technical policies, but it also ensures customer service and it ensures cover and it eliminates unnecessary human delays. So AI is able to gather data from sources that are not usually relied upon. For example, what we have started to see is that we, as an engineering UMA, are starting to look at sources of data that we previously haven't looked at. So, for example, occupational health and safety reporting. A lot of companies in our industry are moving to digital occupational health and safety reporting. And we feel that this may be a valuable piece of data that we could get in touch with. And obviously through the correct channels, we would look at getting access to that data, because occupational health and safety, even though it has nothing to do with our insurance, it has an overall effect and reflect of the compliance and safety culture of the underlying entity. So we're able to incorporate that and weight that into its risk profile to get a far better understanding and feel for our clients. So what AI is doing is that at the very least, it's creating more efficient and accurate processes to underwriting and claims. The second, and I am going through this quite quickly because I've got a fair amount to get through. The second kind of trend that we're looking at today is the connected world. So with having looked at data and algorithms, the logical question would be, where is all this data coming from? And the simple answer is that we live in a very connected world. So connected, in fact, that my health insurer knows what my sleeping habits are like, which can be helpful, but it also feels a little bit intrusive. But it is the connected world that we live in. This is, however, a very exciting development for us as an industry, as we are now able to gather data and develop customer risk profiles for clients in real time. In the personal line space has embraced this quite extensively. And I'm going to focus on the commercial space and lean a little bit more towards the specialist lines because that's where I find myself. So we're going to start off with the Internet of Things. So the Internet of Things basically means that it refers to an asset that is connected to the internet via a device or internet-enabled onboard computer that either feeds data directly into a database with regards to and kind of references the operation of the asset, or it can be controlled remotely. It's estimated that there's going to be 1 trillion connected devices by 2025. 2025 is around the corner. 1 trillion connected devices is a fair amount of connected devices. And we'll get back to responsible adoption of technology in a bit. But this access of real-time data allows us to do a whole bunch more than what we've previously been allowed to do. So I want to demonstrate the kind of traditional way of looking at machinery breakdown claim versus the preferred future way of looking at a machinery breakdown claim. So traditionally, we offer machinery breakdown cover. It is basically cover that provides indemnity for mechanical failure, sudden and unforeseen, and associated to that loss of revenue. The big problem with machinery breakdown claim is that at claim stage, there's a lot that needs to be verified and checked in order for us to determine a valid claim. So at claim stage, there's going to be questions around productivity, overall product performance, output, overall contribution to product line, and overall contribution to revenue of the business to determine loss of profits. At claim stage, this is probably the worst time to be asking questions like these to the insured, who is actually just wanting to get back into production and avoid the loss or missed orders or potential fallout from having a claim. So at claim stage, nobody is in the right frame of mind to be logically answering questions. So if you fast forward to a device-enabled sensor-installed telematics type solution where machinery has telematics installed and sensors that are pulling data off that machinery, that whilst during the insured period is providing data around production levels, temperature of the machine, operator experience, service intervals, all the types of data that would require claim stage is coming through in a constant real-time environment. You then have a claim and the data is already gathered. So no further need to ask any further questions. What you do is you start initiating the claims processes. So you take the important data, you compare it to the algorithm spits out overall production. Before the machine is actually pulled down, you're in a far better position to have quantified the claim and started the claims process by either initiating repairs or calling out support. And with regards to loss of revenue, the point in time where the parameters and the data points start showing a dip in revenue and products, you're able to start quantifying that from a data point of view in real time. So, effectively you could pay out a claim before the insureds actually even felt the effect of having the claim. And that's the power of a kind of connected Internet of Things world. And this stretches across the value chain, in all types of insurance products. So I'm going to move ahead then to autonomous vehicles. I've got a bit of time. So autonomous vehicles are commercial. I'm going to just focus, like I said, on the commercial side of things. So the commercial vehicle fitted with hardware and software devices that enables it. Sorry, my spelling, obviously put together late in the evening. That enables it to perform dynamic driving tasks without physical human intervention. So these vehicles can range from drones, trucks, and even heavy commercial mining machinery. There are various levels of autonomy, but for the purposes of today's discussion, we're going to look at level 5, which is full autonomy. So over the past decade, there's been a lot of progress with commercial autonomous vehicles. And currently across the globe, there are pilot cases and use cases that are being currently rolled out. So as legislation around unmanned vehicles on public roads is amended, this traction and momentum will continue. But autonomous vehicles are best used when the conditions are known. Like route and road conditions, those need to be fully known for the autonomous vehicle to be at its best. That isn't quite there yet, and I suppose that's why the testing is rolling out. But it's going relatively well, and I don't think it's going to be long before we see big progress in this space. Caterpillar and Komatsu, who are two big OEM manufacturers, OEM producers of mining equipment, they both have fully autonomous mining vehicles. And mining companies like Rio Tinto and BHP Billiton have both already started rolling out fully autonomous vehicles across their mines. Rio Tinto in particular, they are quite quiet about it, but their order to Caterpillar to produce autonomous vehicles for their mine in Australia is a new mine that's going to be opening up, and they're going to go fully autonomous in that mine. So a couple of examples of the HCV, 18-wheeler, self-driving truck. The existence of a cab is not a lack of confidence on the part of the designer. Basically, where we are with regards to self-driving trucks is that, like I said, conditions need to be perfect. There needs to be as few unknowns as possible. But what tends to happen at the end of the journey or the beginning of the journey, it needs to navigate out of suburban areas or highly built up areas, and those are unknowns. The route may change, the road conditions may change. There still needs to be the ability for a driver to take control of the truck. But once it's on the desired route, it kind of goes and does its thing. So that's an 18-wheeler self-driving truck, which is quite impressive. Going on to the mining situation, this is the top one is Caterpillar, the bottom one is Komatsu. Both of these are fully autonomous mining dump trucks, capable of upwards of 100 tons of haulage. Now, both of these trucks were demonstrated and are in production and ready to roll out. They are very expensive, double what you would pay for a normal articulated dump truck or a dump truck of this size. But they were demonstrated at the latest CES conference in Las Vegas at the beginning of this year. So that is technology developments that have come quite a long way. So what do we need to understand from an insurance perspective? So insurance for autonomous vehicles, the human risk and error is being removed. There's greater operational efficiency and lower safety incidences. So our exposure to accidental damage, that peril and that exposure needs to be reconsidered. Do we need to rethink that, or is there a decrease in it and not an absolute zero, because autonomous vehicles still have accidents? But needless to say, as we take away some exposure, there are the exposures that arise. So do we now need to start considering cyber exposure for autonomous vehicles? The threat of a hacker getting into an autonomous mining vehicle with 100 tons of payload on the back is quite a worrying concern. But in the end, there are going to be some insurance considerations that we need to think about. So premiums could perceivably be reduced. But autonomous vehicles come with a massive price tag. So the reduction in exposure and premiums may be offset by the massive price tag and the increase in sum insured. And the massive price tag is the biggest hindrance for autonomous vehicles to gaining massive amount of traction at this stage. So that is the connected world. I would like to kind of move on to it's not the connected world. I want to move on to digital twins and augmented reality. Again, this is a very interesting aspect and trend that we're seeing in the technology space. So the fourth industrial revolution is characterized by the blending of the physical and digital world. Augmented reality and digital twins, which basically is a digital model of the physical environment, have created environments where our world is now programmable. So we can design something in the digital world, amend it, see it through to its completion before we actually even go into the physical world. So we can program every minute little instance, down to human DNA, by the way, which is a scary progression. But for underwriters, if you look at the material world, we have access to now digital rendering of a physical environment with more detail than ever before. From our desks, we can break down construction projects to their actual nuts and bolts. We get to now understand how elements of the various project pieces work together and interact, and each of the components, how they make up the project and how they interact with each other, even with existing components. So the use of building information modeling and artificial intelligence is driving a far more accurate underwriting and will drive that underwriting well into the future. At claim stage 2, if we've got access to a digital rendering of a project that is ongoing and there's a claim on the project, we can refer to the digital rendering, determine the quantum, understand what happened, determine proximate cause, and it creates a far more efficient claims environment. So this is just an example of what a building information modeling rendering looks like. And you can see each component is color-coded, each component is broken down to its overall contribution to the project. And at any point in time, we can pull this entire rendering apart and look at at all the piping, all the rebar, all the concrete, anything that we want to look at in this, we can pull it apart. And we can do that now from our desks. We don't have to go out on site and understand the project from the physical environment. So that's quite a big trend to be aware of as we move forward. I want to quickly touch on platforms. I'm not going to spend too much time on this. This is just a information kind of purpose platform. And it's just something we should be aware of as an insurance industry, as how our customers are starting to interact with technology and what they're looking for with regards to technology. So digital transformation has increased substantially and gained some real momentum, especially in the post-COVID world. It's data is not only become digital, but the storage of data has also moved offsite into the cloud. And the next iteration of cloud storage is industry cloud platforms. Now, industry cloud platforms are a combination of software as a service, infrastructure as a service, and platform as a service. So industry cloud platforms have been developed to incorporate and service similar vertical business requirements within industries. So requirements like reporting, compliance, solvency, human resources are areas where industry cloud platforms are useful for consolidation. In most cases, businesses don't rely on these areas as value differentials. So it starts to become clear that industry cloud platforms that account for these functions start to make sense. Industries such as financial services or manufacturing have very similar vertical requirements of their individual companies. So industry cloud platform providers have created an offering to provide vertical business integration and platforms that allow businesses to adopt a scalable solution. So if you're taking care of your vertical requirements of a business, you get more opportunity to attend to the stuff that's going to be customer acquisition and product development and overall growth. So the insurance underwriting considerations for ICPs, I just want to quickly touch on it, and it's around relevance and ability to interpret client data. So we need to be in a position, as this gains traction, we may see in-house improvement ourselves from our platform and utilization of a platform like this, but we need to be in a position where we get to understand our client's data correctly. And as the traction grows from the client industry side, we need to be in a position where our own systems speak to our client systems. So we don't want to be in a position where our system and their system don't talk, and there's a potential mismatch of data. There's a whole bunch of other stuff that needs to happen then in order for us to extract the value that we can from this. It's like putting coffee beans into an espresso machine. You're wanting to get a cup of coffee, but the inputs are mismatched. They're not compatible. So moving on quickly to super apps. Now, super apps are an interesting trend. Super apps basically are an application that provides users with a set of core features, but they have access to other embedded independent features that are independent. This trend is being driven primarily by a new generation of digital natives, and these are customers that we need to be aware of that are looking for fast and convenient solutions to their needs. So forward-thinking organizations are starting to benefit by collaborating with adjacent industries and embedding their products and offerings into the architecture and distribution channels of these industries. So financial services is a logical ecosystem for a super app usage. For example, a banking app may have an embedded independent insurance offering that has the potential to be of a greater kind of market penetration. So in the engineering space, our embedded product offering into the app or service of an OEM or equipment manufacturing or servicing could create a one-stop shop for the client. New equipment being added, new equipment being serviced, old equipment being serviced. As an insurer, we get access to that, and as a customer, the customer gets access to the insurance. If you just look at it from a practical point of view, a lot of our homes are automated now. So we have all our where we can. Our homes are run off a home automation app that controls our switching on, switching off lights, controls our solar installations, controls our plugs, whatever needs to be controlled in that. But in the not too distant future, it would be very convenient for our homeowners insurance to be incorporated into a home automation app, because at any point in time, we can make sure that we have the right sum insured in place, we have got the right contents cover in place, we've got a bunch of kind of checklists that we can do all from one app. And not only that, if the insurer has put together parameters to monitor our home usage, they could pick up sort of parameter outliers that may be pointing to a leak if we've got an abnormal water usage or abnormal temperature. There could be an indication that there might be a fire. So actionable insights that are really convenient to pull into. So I know that I'm running a little bit late, but I do want to touch on Web 3.0 and distributed ledger technology, because that for me is a very important insurance implication. So Web 3.0 is basically the evolution of the internet, and it's now the internet of value. It allows users to utilize the web to transact in a secure and trusted manner. Trust and transparency has become a really key consideration, something that insurance professionals like yourselves on the call are very familiar with. But we've often not been able to get to a place of trust with regards to internet. So distributed ledger technology, or smart contracts, which is basically the underlying technology on which crypto runs. So it's often referred to as blockchain. That is helping and will help in a long way to create the sense of trust. So it's a digital ledger that records and verifies transactions between parties, not controlled by anyone and not owned by anyone, but it's not controlled by a central figure. It's decentralized, as its name suggests. So there are a number of useful insurance applications for distributed ledger technology, not just in policy preparation. So policy preparation and contractual side of insurance, very kind of valuable in that there's a distributed involvement of all parties involved. So the broker, reinsurer, insurer, regulator, all have a part to play in the distributed ledger. But what are kind of some of the applications that we're seeing some traction in is that it's being used as a register for high value items. So currently, high value items, there's a transparency and trusted register for high value items, immutable ownership history and claims experience, all contained within this transparent ledger. It's now being used as a know your client anti-money laundering tool, which gives insurers access to insurers' activities and interactions, and allows insurers to get close to their clients. This is becoming more important as insurers are starting to become reportable institutions. They are starting to have to answer questions around their clients and how they onboard them, etc. Another aspect where it's being used is the reinsurance space. So all parties, reinsurer, broker, insured, regulator, all have access to a distributed ledger. They get real-time data changes, any way that there may be changes to the data that's being inputted. This is going to fundamentally change the way that treaties are set up and bound. And as well as kind of the running of a treaty through the period, it's going to fundamentally change the way that it's viewed, because it's real-time and it's distributed, so it's transparent. And then the claims register. So, for a long time, there are omissions and errors in claims registers that have been produced in a physical environment, and these lend itself to there being fraudulent claims. And we need to get to a place where we get more transparency and industry-wide standard for claims registered. So distributed ledger technology, very helpful with regards to claims registers. So I want to end on a consideration around sustainability. So technology advancements are not done in isolation. There's always going to be an ESG consideration, and ESG considerations are infiltrating across business sectors. Technology is not immune to this. So we need to be very aware that advancements of technology come at a cost. So the rare earth that goes into the hardware that allows technology to advance, the huge amount of power that's consumed to keep server environments up and running, and the cost of jobs that might be lost with regards to the automation of processes. thankfully, we've got history as a reference, and we have been through 3 industrial revolutions. We have the opportunity to look back at history and take what we've done well and disregard what we've done badly. But there is a massive opportunity. The insurance industry has a lot to look forward to, and this opportunity is in its infancy. And if we stay curious, we can achieve some amazing things by grabbing hold of some of what is available to us. It is there, it is being rolled out. It's not the distant future anymore, and that is me. Sorry for the rush, but I know we are tight on time because it is a special occasion. So thank you very much for listening.
Thank you, Chris. How data and technology are transforming insurance underwriting. That was hugely insightful, and we really appreciate you taking the time to join us this morning. I'm going to hand over to our next speaker now. It is a very well-known individual in our insurance in the insurance industry. It's Thokozile Mashlanga. She's the CEO of the Insurance Institute of South Africa. And the IISA is a very important part of the success of InsureTalk. We typically use their facilities in Sandton to broadcast our conference from our virtual conference. We have them as our CPD partners. And Thokozile specifically asked me today to mention something to you. Please apply for your professional memberships. Become members of the IISA. It is a great thing to go through the process to show your potential customers, potential employers, and employees that you value the professional membership that comes with an organization such as the Insurance Institute of South Africa. So Thokozile, over to you. We would like to hear from you as far as an industry update is concerned.
Good morning, ladies and gentlemen. It was 3 years ago that InsureTalk came to life. Happy anniversary, InsureTalk, and congratulations to the CN&CO team for making it possible. And congratulations to every single facilitator that participated and made this InsureTalk possible, and to every single speaker that has taken time to be part of the InsureTalk. We appreciate you. InsureTalk has become a go-to platform where people gain insights on what is happening in the industry, the latest, where we gain knowledge, where we keep ourselves up to date, where we enhance our awareness, our knowledge, and where we keep abreast with what is happening in the industry. And it is CPD accredited. Now, being April and towards the end of the CPD cycle, I want to remind every single professional to make sure that their CPD records are up to date. I know many of you, many of us, go on to a lot of webinars, but we don't record our CPDs. Some of us do a lot of other things outside webinars that we don't report. So I want to encourage each and everyone, if you are aware that your CPD status is not in order, this is an opportunity for you to update your records between now and May. Better to do it early rather than to wait for the last week of May. There are many other activities that you can do other than attending webinars. You can also attend in-person workshops and seminars or conferences like the AIE. You can also watch recorded content, which is also available on our membership portal. Previous AIE conferences are available there, free to members, of course. There is a fee to pay, marginal fee to pay for non-members, but that content is also available. I know many of us also resort to professional reading. Professional reading is also a CPD accredited activity, but it is not the only thing. Remember, you also can do a whole lot of other things. I've just mentioned webinars, I've mentioned in-person conferences, I've mentioned recorded videos. You are also studying, many of us, studying towards a formal qualification or a short course. Those are also CPD accredited activities. So do remember to submit the results after completing your short course or after completing a module towards a formal qualification. What also counts towards CPD activities is being a presenter at events, where the event is a webinar or an in-person or a pre-recorded. As a presenter, we give you CPD hours, including preparation time. So you get preparation time, CPD hours, and you also get the presentation time. Even the repeat of the same session, you also get CPD hours for that. So remember, there are many other things you do in your day-to-day life that counts towards your continuing professional development, including mentoring and coaching. There must be an agreement between the mentor and the mentee that can be utilized as evidence. You may be writing articles for Cover Magazine, FA News, FA Insight, or any other journal. That also counts. You may be involved in drafting of books or in reviewing of books like what we provide to the industry as reference material, or any other a book that is utilized by the higher learning institutions. That also counts as part of your CPD. Or you may be a part-time lecturer or a guest lecturer at one of the higher learning institutions. That also counts as a CPD activity. So remember, there are many, many activities that you do in your day-to-day life that counts towards your continuing professional development. With that, I want to close by saying during the month of May, we're going to be reintroducing in-person workshops and seminars, half-day seminars, 2-3 hours seminars. Keep a lookout. We have packed up interesting content that you do not want to miss. We were partnered with various partners in the financial services sector. Some are not necessarily within the sector, but the content is content that is relevant to you and me as people that operate in the financial services sector. So keep a lookout on our social media platforms, on our emails, as well as on the website. We'll be updating our calendar there. You do not want to miss the content that we are going to be sharing. And of course, all that content will be CPD accredited. So it's an opportunity for you. If your CPD is lagging behind, it's an opportunity to go and attend the in-person events, learn, engage with people in person, reconnect with some of the colleagues that you may not have seen in person in a long time. So remember, we are here to provide a platform for professionals to engage, to network, but to also learn. See you next time. Thank you.
Thank you, Thokozile. Now over to Rianet. Rianet Whitehead is the founder, co-founder, owner of FA News magazine, and I should say founder of the Insurance Apprentice, because we're right in the middle of the very exciting show that's airing each week on our screens, on our small screens on our desks. And we got Rianet as part of the InsureTalk team media partner a couple of months ago. And each month she gives us an industry update from a media perspective, and it's extremely insightful. You know, it's great to see how Rianet actually takes the time to research and give us feedback that's very valuable, and that really does hit the mark. So Rianet, I'm very excited to hear about what's happening in the industry at the moment, and I just wanted to say thank you for keeping us so engaged and entertained and excited with the Insurance Apprentice show each week. So over to Rianet.
Morning. So let's start with the important stuff. A big congratulations to InsureTalk on your 3rd birthday this month. You have done a great job and clearly have some avid fans. So here's to a lot more InsureTalks with us by your side, of course. Another happy birthday, and this one goes to Christelle, our InsureTalk host. I'm also celebrating her birthday this week. It's clearly a good time to celebrate. Congrats, Christelle. My name is Rianet, and I'm the editor of the FA News magazine and the creator of the Insurance Apprentice. So let's start with a quick update on some FA News stuff. As we speak now, episode 4 of The Insurance Apprentice is also underway. The good news is that you can watch this tonight or just after InsureTalk, because although the learnings on insure stuff is really big, like in really educational, it is most certainly also fairly entertaining. So it's like watching a reality show. The sponsor for today's episode is the Insurance Crime Bureau, and the tasks contestants were given were as follows. Today, you are all executives within different insurance companies in South Africa. Your companies are all starting to experience a significant uptick in fraudulent claims, which could be attributed to the use of identity theft and money mules. You are tasked with the responsibility to establish an effective solution to address the threat of organized cross-carrier fraud. Our very own Garth de Klerk was the judge, alongside Simon Coleman and Nonks Dlamini, of course. So the question is really, was there any papers thrown, or did contestants find the perfect solution without any drama? I am not a spoiler, so please go and watch the episode on either YouTube or the Insurance Apprentice Facebook page. I have to mention that we have some prize money to win with every episode, and another competition with a 4,000 Rand win where you vote for your favorite contestants. And not favorite as in the person you think are going to win, but maybe it's someone you know, maybe it's a colleague, and maybe it's just someone you really like. If they win, you stand a chance to win 4,000 Rand, and they are going to win 4,000 Rand. So go and find the link on our Facebook page, or on our Twitter page. I think it's even on our Instagram page and our LinkedIn page. So many options to go and find that. On 10 May, FA News will be hosting a webinar on grid failure, the possibility of a grid failure and grid exclusions. Monique Leroux from the CSIR will talk to us about the load shedding forecast and the risk of a grid collapse. Vivian Pearson from SAIA will talk about the bigger picture from the insurance point of view, and Seamus Casserly will represent the FIA and take us through the conversation with clients. This is going to be a good one, and I'm particularly looking forward to Monique's presentation. There is a banner on the FA News website if you want to register. The invite was sent out yesterday to our email database, so if you are a FA News newsletter subscriber, it should also be in your inbox. The date again, 10 May, 10:30 start. So the Insurance Crime Bureau also has their yearly conference on 10 and 11 May. So there's a slight overlay, but with technology these days, you can attend both fairly successfully. Don't tell Garth, but the wording on the bottom of the episode goes with the episode. So you can just put your phone or your iPad on silent and watch it while the conference is going on. Okay, then of course the reminder to register for the AIE conference taking place in Sun City, your place to network, and of course earn your CPD hours. I went to check on the calendar.org.za to see if there are any other big events specifically in the short-term or regulatory space, and I've not picked up anything. So if you know of any events or you are hosting anything, please feel free to add them to the calendar.org.za. You basically do the upload yourself. It's very easy, very user-friendly. We get a notification on our side and we approve it. There are no costs attached to add your event because we are nice people here at FA News. So please make sure you add your event. Maybe then a good time to remind the ladies in Gauteng about Gauteng Women in Insurance, which is a network of women all working in the short-term insurance industry, any part of it. There's an array of events, from the serious leader walks to the fun mix and mingles to networking events with inspirational speakers and everything in between. And yes, we also have a gold day. It's really a fantastic place to meet like-minded people and build your network, not to talk about the personal and professional growth opportunities presented. I am a founding member, so although I'm not personally involved anymore, it's still very, very close to my heart and a platform that carries immense value. The events are listed on the calendar.org.za, but you can also get invited if you are a paid member. Membership is only 390 Rand per year. So Google Gauteng Women in Insurance or drop me a mail if you need more detail. If you are not in the Gauteng region, you can sign up for our amazing newsletter by basically becoming a non-paid member. So the purpose of a non-paid member is that you get the newsletter. So there's always great content in it. It's not always about the events we have or had. There's some really great interviews and some really great just thought leadership content in this magazine or in this newsletter rather. So the FA News April edition went live and has been posted for those who still love the smell and feel of print like me on Tuesday. This edition is great, and I know I'm supposed to say it about each edition, but I have to say that we really got the mix and the topics well this time. It is great that it happened this way because it is the last FA News edition before the close of the CPD cycle, which is of course 31 May. Remember that on top of the CPD hours you get with InsureTalk, you can get 3 hours with each FA News edition. Our system is free and super user-friendly. So jump on if you need some hours. It's not a great advert, but our system was close to crashing on 31 May last year. It was unbelievable to see how many people tried to get their last hours on that day. Please, people, aim maybe for like 15 May latest, because I think from 15 May our system is going to start getting slightly slower every day. You'll do yourself and anyone else who have to deal with the paperwork around this a massive favor. We are a nation of doing things last minute. We tend to do that. So let's break that mold and rewire our brains to change the pattern. Quick mention of some of the topics in the FA News April edition, just if you want to go and read. Our cover page is Manisha Chiman, the newly appointed business leader at SHA, taking over from Gareth Beaver. We talked to Manisha about her new role and her plans for SHA going forward. We talk about the Hollard Highway Hero campaign, which is also something I'm super excited about because the bigger impact of this campaign is just incredible. When you start reading about the numbers and the difference they make, it is goosebump stuff. We have also profiled Fulcrum's seamless premium finance and collection offering. We talk about Goldrist's Launchpad, an InsureTech initiative that they've launched. Very, very exciting stuff. Obviously, climate change is top notch. Reinsurance topics, red flags for brokers, condition of average in a highly inflation environment, the very important topic of how to include the low-income market in all our offerings, or at least in some of our stuff. The importance of service in the claims environment, and feedback that we've received is really that from the brokers, they are a little bit frustrated because since COVID, it seems like there's been with this work from home story a bit of a challenge around accountability. So we will talk about some accountability issues in our next edition, but that's just some of the feedback. We talk about the new trend in vehicle theft, where you park your car and you come back and some of the parts are missing. And it seems like it is a global trend. It's not only South African. And war, terrorism and catastrophe, the policy exclusions need updating. Cyber insurance remains a hot topic, and succession planning also. Thank you for listening to me. Enjoy the rest of your session. Once again, thank you to InsureTalk for the opportunity to partner with you. So enjoy the rest of your session and see you somewhere soon. I'm Rianette Whitehead from FA News, signing off.
As I mentioned to you earlier at the start of our show today, it's our third birthday this month. And it is, it's quite an achievement because InsureTalk was born in the dark days of lockdown, literally a few weeks after we went into hard lockdown. So I have a very special soft spot in my heart for the way that we've managed to stay together as an industry, stayed informed, and we carried on our continuous professional development through attending these sessions each month. So the guys or the team, I should say, at InsureTalk has put together some really interesting inserts for you. We have a fantastic competition that's been running, so we're going to be making an announcement around that in the days to come. And we're just here to celebrate something really, truly remarkable and special, which is this monthly opportunity to come together in the virtual world. So from me to the team at InsureTalk, I just wanted to say congratulations, and how wonderful to see something that started with a couple of, I think they had less than 100 people or just over 100 people at the first session, that have grown into a monthly session of thousands. Over 3,000 people have subscribed to attend today's session. It is a remarkable achievement, and it was achieved through passion and commitment and never saying no. So happy birthday to InsureTalk, and we hope to see many, many more years of this virtual event.
A huge happy third birthday to InsureTalk. My name is Prasadni Naika. I'm the Head of Marketing and Communication for Old Mutual Insure. Old Mutual Insure is proud to be associated with the InsureTalk platform, which allows us to share insights, engage and develop and grow the insurance industry. Here's to another great year of world-class engagements with InsureTalk. Happy birthday.
I actually hosted the first InsureTalk back in April 2020. And like so many people, I was terrified of the pandemic, and I actually wasn't sure if I could handle the pressure of hosting a big event online. I mean, it was so new to all of us back then. Fortunately, Carl was very supportive when he asked me to do it, and I found an inspirational WhatsApp he sent me just before the event. Have fun and don't fuck it up. Thank you. It was a privilege I'll never forget. Happy birthday, InsureTalk.
Happy birthday, InsureTalk, your third birthday, and I couldn't be more proud of what the InsureTalk team and the industry have achieved together. When I was 3 years old, there's barely been TV in South Africa, but 3 years onto your existence, you have done phenomenally well. So congratulations, and here's to many, many more happy returns. Thank you.
Hi, InsureTalk team. Thank you very much for creating this very informative and insightful sharing platform for the industry. From Global Choices, we wish you many more years of InsureTalks and happy 3rd anniversary.
Hi, it's Colin from CN&CO. Happy birthday, InsureTalk. It's been a hell of a ride for the last 3 years and looking forward to many more.
To start a business at the height of COVID lockdowns and then grow it into an online conference that's the pinnacle for the insurance industry speaks to the tenacity and grit we've come to know from CN&CO. Elite has been proudly part of the InsureTalks right from the start, and we made our small contribution, of which we are also very proud. Happy 3rd birthday, InsureTalk.
Dear InsureTalk, happy 3rd birthday from the Lombard team. Thank you for your contribution to the industry. Thank you for keeping us informed and connected. To many more years. Have a good one.
Happy birthday, InsureTalk. 3 years. Wow. Where has the time gone? But congratulations to all involved and to the organizers and all the speakers and panelists and sponsors and partners and everyone that made it possible. It's been an epic journey and really incredible to witness the growth of such an exceptional online webinar that I think has probably grown into the largest in Africa. So congrats to you guys, 3 years, and all the best for the future. I'm Kurt from AMI Underwriting Managers, and of course CN&CO, but just wanted to say happy birthday and to many more to come. Cheers.
Happy birthday, InsureTalk. It's been 3 wonderful and successful years, and we wish you a spectacular celebration and fabulous years ahead. Congratulations from the cover team.
Hi, this is Anel de Klerk. I do administration at Dynamics Blue Star, and this is a shout out to InsureTalk for their birthday. I'm going to try and sing happy birthday to you, happy birthday to you, happy birthday InsureTalk, happy birthday to you, happy birthday InsureTalk.
Hi there, InsureTalk family. It's Nontutu Mkumo over here, the former host of InsureTalk. Well, I for one cannot believe it's been 3 years. What an incredible journey it has been, and what a joy it's been to watch the InsureTalk brand grow and evolve over the years. You do such important and meaningful work for the insurance industry, and I have no doubt that you'll continue to do this in the years to come. So with that, I say happy 3rd birthday, and wishing you many more to come. And lastly, a big shout out to Christelle Coleman, who's doing an absolutely phenomenal job as the InsureTalk host. Happy birthday.
Okay, so I'm very excited about our next speaker. It is another Lombard colleague of mine, Jacob Shabalala, and he is the data science lead at Lombard Insurance Company. And the topic is, well, you know, it's a complicated topic, but he's basically going to talk about ChatGPT. And Chris mentioned at the beginning of the session this morning, he was talking about telexes and the way things were before. And I'm also of that age where I remember when we got fax machines for the first time and when we got emails and when I got my first cell phone, because I had a sales job, I got a cell phone before my friends. And I've always been an early adopter of technology. Now, I have found ChatGPT to change my life in a very positive way. As an example, I will go, I've got 3 ingredients. I want to make something that has got an Eastern flavor with it, but must be vegan, whatever. I'll give it all sorts of instructions, and out comes recipes. So it's not just in a professional perspective, but of course, that is where we see the biggest value for the artificial intelligence tools such as ChatGPT. So I really, really hope Jax is going to give us some interesting insights on how ChatGPT is going to change the insurance landscape for the better. Thank you. Over to you, Jax.
Thank you so much. Let me just share my screen. Please give me a second. Thank you very much for having me in InsureTalk. My name is Jacob Shabalala, short for Jack. Well, my nickname is Jax. Everybody calls me Jax, so I typically go by that name. And today I'm just going to give you a synopsis on ChatGPT. It's a very complex topic, so I've tried to simplify it to the most basic level. And I think it's equally exciting. And as well, I think it's the biggest thing in artificial intelligence right now. So the main topic is ChatGPT revolutionizing customer service in insurance and underwriting in the insurance industry. So I'd like to take you through what exactly we're going to be talking about. I'd like us to understand what is ChatGPT, how it works on a very simplistic level, what are the potential effects of it. I think it's important to note that the effects of it are not factual at this stage. It's all speculative, and there's different narratives in the market based on different research studies that have been conducted. And then we'll just assess why we need it. So in order to understand what ChatGPT is, I'd like us to build context on what was happening in the market and in the tech industry that led to such an amazing product being built. So back in 2017, a few Google data scientists came together and they launched a paper that was a suggestive research paper called Attention is All You Need. And in this paper, they basically provided a new way to run neural networks, which is it was a groundbreaking innovation in the market, and it got people excited. And this new thing for modeling was called transformer models. So a lot of people read this paper because it sent shockwaves to the industry, and they started to understand what transformer models are, how they work. One such company that basically took this research paper and started doing work on it is OpenAI, and OpenAI are the creators of ChatGPT. So following from that, OpenAI then created GPT-1, their first iteration on this paper, on the transformer model. They created GPT-2 shortly after that, and then they eventually created GPT-3 around 2020, which was like a couple of years ago. And that's when they really broke through and they started getting more traction and more recognition in the industry. But it was only limited to the tech industry and researchers. So they then iterated further and they wanted to build and launch GPT 3.5. So you're probably wondering what GPT stands for at this stage. So GPT is actually an acronym, and it stands for Generative Pre-trained Transformer, right? And this shows us that the basis of ChatGPT is the transformer model. So in trying to launch GPT 3.5, the fourth iteration of their version of the transformer model, OpenAI realized they needed to make it open to the public, and they needed people to be able to interact with it in a natural language. So they decided that a chatbot would be the best visualization tool for it. So hence the name ChatGPT. And a chatbot is a way for humans to interact with computers. And I think ChatGPT is the best chatbot we have of all time, because you can actually have an intellectual conversation with it. So it can go from a greeting to answering questions and then generating tasks for you. So this brings us to the actual definition of what ChatGPT is. So I've written here, it's a general purpose chatbot that is trained on broad data that can answer questions about various topics, as well as perform a wide range of tasks. So the broad data that we're talking about is literally all or most of the available public data as at 2021. That's a key thing to note, because anything post 2021, if you ask ChatGPT for anything post 2021, you might not necessarily get an accurate answer. And then we look at on the right what it is that ChatGPT can do. So we know for a fact that it can answer questions with high accuracy. So this version of ChatGPT that we're talking about is the first version that everybody got to use, which was the POC version, and it was a public version. And this version had an accuracy rate of 65%. So how they determined this accuracy rate is they made it write different standardized tests that have to do with intellectual property. So it wrote medical exams, it wrote physics exams, it wrote MBA exams, law bar exams, and it got on average 65%. However, as of, I think about 6 weeks ago, OpenAI launched ChatGPT version 4, right? So GPT-4. And that model is updated and it's 85% accurate based on the same standardized tests. So what this means is this model can be a very smart human being in different contexts. So it can be a medical assistant, it can be an underwriting assistant, it can be a coding partner if you're into programming. It can be your mini MBA assistant if you want to solve a business problem, right? So literally it can answer questions with high accuracy, it can do anything. And I think the scope of it is not limited to a particular task or a particular type of question. So I'd like to encourage everybody to use the tool and just find out how it works. And hopefully we get to understanding how it works as we go forward. The second thing is that it can generate creative text like poems, code, policy wording, anything that you ask it to generate from a creative perspective, it can. But the limitation from this perspective is that it might not be able to give you facts, right? Because it's not necessarily, so this version of ChatGPT wasn't connected to the internet, so it can't give you the latest data. It's trained on public data that was available until 2021. That's a key fact. But the latest model has been connected to the internet, and it's connected to the internet via Microsoft Bing, but that's kind of out of scope for this one. So if you ask it to generate something, it can. So for instance, you ask it to generate a poem for you, it can generate the poem with the right technicalities within that realm of operation. But the question now comes, can ChatGPT be more creative than a poet? I think the answer to that one is, it depends. There's different nuances, there's different contexts that can enable either answer to be true. So can ChatGPT be better at underwriting than an underwriter who's been doing the job for 20 years? Maybe highly unlikely. But can ChatGPT come up with a basic underwriting methodology or framework? Yes, it can. And can it optimize on that framework? Yes, it can, right? So it's about performing certain tasks and not necessarily outperforming the human being or outperforming experience. And then as of late, they had to make updates to the ChatGPT model because people were starting to ask it to do certain things that were inappropriate and offensive. So lately, with the latest update, it declines answering questions or performing tasks that are offensive and inappropriate. So what is the right format to use when working with ChatGPT? So I think the mistake that people do is they sometimes confuse ChatGPT for Google. So you just ask it a question and then you expect a list of things. But I think it can go further than that. The correct format, according to OpenAI, is to first look up something. So ask it to research, and then ask it to produce something based on that research. This is similar to how you'd ask an assistant in a professional environment to go look up a bunch of files and then produce a report based on the files that the assistant would have looked up. So in this context, ChatGPT is your ultimate professional assistant. So in understanding how it works, I thought it would have been better to create a live demo, but it's actually very limited. The ChatGPT is not very available at the moment due to large usage. It's very unreliable in that sense. So I created a little picture here just to take us through how the language model would work with ChatGPT. And you essentially have to feed it a message, right? You feed it a message, and that message is actually called a prompt, which gave rise to something called prompt engineering, which is how to engage with something like ChatGPT or any AI tool to get the best out of it. So based on the 5 words that you see on the screen, which is the prompt that you would have fed it, it would then calculate a probability of what the next word would be. So if you had a 500-word essay, you essentially had 500 probability calculations per word. So it calculates probability for a next word generation. And this makes it very good at calculating, performing cognitive tasks that most humans can perform, but it's actually the first time we see this in technology, really, in AI. So I think this moment is similar to the moment when the first iPhone came out, because that's when we first got to realize how smart technology can really be. So this language model, our version of it, in a mini sense, is basically telling us that InsureTalk is an awesome webinar. If you look on the right, you have different words and different numbers. Those numbers are actually probability calculations, and the probability typically range from 0 to 1. And as we can see, the webinar has the highest probability of 0.7. So the model will take this word and go feed it back into the sentence and present it as an output to the user. And I'll mention it again. InsureTalk is an awesome webinar, and happy birthday to InsureTalk. So why do we need ChatGPT? I think this is a very key question, and I think the answer for it is going to evolve over time. But currently, I wanted to assess what ChatGPT actually does and how it differs from other tools in the market. So a friend of mine actually said to me that ChatGPT is like Google on steroids. While that's not particularly inaccurate, I think these two tools solve fundamentally different problems. So Google solves for access to information. And how Google came about is back in the day, information was very limited to encyclopedias and books that were stored in libraries. And if you had encyclopedias in your house, you would be considered very privileged. So Google saw this problem, and they wanted to solve for this limitation. And they went and collected all the information, or most of the information that was available in the world, and they put it and exposed it to the world through a website. So this website gained traction, and Google became the giant that we know today. So ChatGPT is actually following the same pattern. So the guys from OpenAI are actually following the same pattern as Google. They went and collected all the information that pertains to intellectual property that is available on the public domain, public internet. So all public data. And then they used it to build an intellectual property engine. So we're currently witnessing this mass scalability of ChatGPT, which is based on this foundational idea of a transformer model. I think that's truly an amazing time. And it's truly an amazing time that we're living through. And the fact that we get to live through multiple stages of growth in the internet is actually really great. So hopefully ChatGPT becomes the Google of the new, right? And just to reiterate, Google solves for access to information. ChatGPT solves for access to intellectual property. And when you think about it, intellectual property has actually been a privatized and commoditized thing for a very long time. And the ability to access any intellectual property was never a possibility before. So people had to go for 3-year degrees, 5-year degrees, 7-year degrees, if you're a medicine or a medical doctor, to obtain intellectual property, or you had to work for 20 years in the insurance industry to obtain intellectual property. So that is quite an amazing thing, in my opinion, but it also raises a big risk, because what is intellectual property if it's in the wrong hands? What is intellectual property if it's in the wrong context? What is intellectual property if it's misunderstood and the interpretation of it is applied incorrectly? So this brings us to the effects of ChatGPT on insurance. I think from a professional perspective, I found that these 4 factors would be affected the most or exposed the most to ChatGPT. So productivity is a key one. I think there's a stat that says ChatGPT will increase the productivity growth percentage by 1.5% over a 10-year period. So if productivity was going to grow by, say, 5% over a 10-year period, add 1.5% on top of that. It might sound minuscule, but this is global productivity. And you never know how much that's such a small percentage shift, how much value it could unlock, right? And then from a productivity perspective as well, I think there's going to be pressure on people who are professionals, who are in underwriting or in technology, who are mathematicians, statisticians, to produce work much quicker, because you'd have ChatGPT as an assistant and you wouldn't have to start from the bottom and start thinking from scratch. So for instance, if I was me as a data person, if I was to, for instance, I wanted to create policy wording, I'd ask ChatGPT to go and look up the top 5 companies that specialize in motor insurance, for instance, study their policy wording, and then build me a new version of the policy wording based on the context provided by these top 5 insurance companies. I could even go further and tell it that I want my policy wording to contribute to me having a loss ratio of less than 55%, and it would give me a step-by-step approach to doing that. So the difference as well between ChatGPT and Google is Google gives you ask Google for something, it gives you a list of outputs in list form, but ChatGPT would actually, you need to nudge it and prompt it and have a conversation with it and guide it towards certain situations in order to get the output that you want. And that's why learning how to use it effectively is a key skill in today's economy. So there's speculation and people are saying like prompt engineering, which is essentially learning how to use ChatGPT properly, is going to be the most important skill in the new ages in the future. I'm not so sure about that. I don't want to say I differ, but back in the day, people used to sit down with a pen and a paper to learn how to effectively Google stuff. While that's a valuable skill today, I don't think we'd be willing to pay someone to teach us how to Google things or to Google things on our behalf. So I think ChatGPT is going to be so ubiquitous everywhere in every industry that is going to be a critical skill for being effective at your job. And then in the labor market, I think the labor market is very exposed. I saw something like a stat, which was a bit of a crazy stat that said more than 50% of jobs will be affected by ChatGPT. But what does being affected by ChatGPT look like, right? I think the scary headline was that AI is going to take over all of our jobs and AI is going to replace human beings. I'm not so sure. I don't particularly think so. I don't think computers can function autonomously. I know that's the current narrative, but we're still a long way from that. I think the labor market will be affected by the value that companies choose to put on a particular skill. So what was once commoditized is now made public, right? So that would highly likely decrease how much companies are wanting to spend or how much it would cost to perform a certain task. Hopefully, there's better ways that we can grow out of that limitation in the value of a human being, but that's the plausible route that is presented in one of the studies at the moment. Another thing is ChatGPT is predicted to raise global GDP by 7%. And applying trickle-down economics, it might trickle down to the profitability of a business such as insurance. That depends on different market factors, right? Different economic and market factors. I don't want to delve too much over that because I think we don't have the right controls in place at the moment to be able to determine the extent of its impact on the financial bottom line. And then it also presents a problem in terms of the knowledge context. I think I mentioned earlier, applying knowledge in the wrong context, applying knowledge without the right level of discernment, and it raises the questions of who owns the IP that is generated by ChatGPT, who owns the output of what is sitting on, for instance, Lombard's website. If I go and scrape Lombard's website and I get something from it, is that legal, or should it be considered for the greater good of society? Those are questions that we really don't have answers to, but we bring to the table as thought pieces, right? And I don't think we'll have answers to those questions soon enough. I mean, there's lawsuits happening in the United States where companies are suing companies like OpenAI for scraping their data without consulting them. But I think the horse is already out of the barn at the moment. So we'll just see. It's interesting to see how that plays out. And lastly, on the effects of ChatGPT on insurance, I think humans with AI will perform better than humans without AI. I think that's ultimately what the value of technology is in the industry. Technology is designed to take us to the next level of ability, whether it's a cognitive ability, whether it's access to information. It just increases the potential and it equalizes things in society. So I think humans with AI will perform better than humans without AI, but the overall human performance will improve. Such as with smartphones, we saw when the first iPhone came out, it was a groundbreaking event, but now smartphones have become the standard. And I think what we're witnessing at the moment is a new standard is being set from an intellectual property perspective. Thank you very much. That was my presentation, and I'm happy to hear any questions if there are any. I think we still have some time.
Okay, Jax, that was really, really fascinating, and we appreciate the time you took to research that and share your insights on what is a complex and controversial topic and feared by many. I hope people are a little bit more excited about the opportunities that come with innovations such as ChatGPT. It's not March, which is traditionally International Women's Month, and it's not August, which is South African Women's Month. It is just another month. It's the birthday month for InsureTalk. But we have a fascinating speaker up next. I had the privilege of spending some time with her a couple of weeks ago. And her name is Dawn Hurst. It's not a South African, so she's speaking to a South African audience for the first time, an international speaker. She's the CEO of EA Inclusion. And Dawn is a multi-award-winning inspirational executive leadership coach and a CEO with over 15 years of experience as a global influencer. She was recognized, and I want you to really stay with us for this session because Dawn talks on such an important topic. She's recognized as one of the top 100 influencers within leadership development, holder of Entrepreneur of the Year, and recipient of multiple business awards, including appearing in the Who's Who as an inspirational leader within her own right since 2009. She's warm and charismatic, demanding and direct. That's interesting words to have in one sentence. And she delivers all of this from a place of compassion for her coaches. She is popular with her leaders who recognize her as an integral part of their success and development. Dawn is a master practitioner of inclusion and culture, and she's going to talk to us about women in insurance and how the landscape is changing from an inclusion perspective. And she lectures at the Warwick Business School. So Dawn, we appreciate you being here with us today, and I can't wait to hear what you have to share with us over the next 20-25 minutes. Thank you so much.
No, thank you. And thank you for that introduction. Slightly embarrassed by that, and slightly embarrassed to actually follow ChatGPT. It really is mind-blowing, Jackson. Thanks very much for sharing that. And of course, starting with a huge anniversary, happy birthday, InsureTalk. It's great to be here for this special occasion. I am here today to speak to you from the perspective of considering diverse talent within the sector, and also from a position of having worked across the insurance and financial services sector, as well as multiple sectors, but having seen the impact that diverse talent, and specifically today we're going to talk about women in insurance, can have on innovation, business performance at EBITDA level, but also in terms of the richness that having a diverse workforce can bring. I want to start by talking about what the future looks like. And of course, the whole of your programme of activity today is focused on this. We've heard already about technology and ChatGPT being a key part of that. You know, the point Jack's made was that the statistics are saying that 44% of insurance work activities can be automated. But I also take the point around the fact that there will always be a place for us in this sector, because that information has to come from somewhere. And as a lecturer on master's programs, I am seeing some of our students taking the shortcuts with ChatGPT. And we're challenging quite hard on what that means in terms of skill. If we think about future talent, of course, it's important that we recognise that to meet the needs of what our sector needs, we're going to have to be creative. We know that we've got reducing birth rates. We know that we've got less interest in certain areas of our commercial world. And therefore, we've got to appeal to a much broader audience. And again, the importance of that, of course, is that 80% of people choose where they want to work, and a huge proportion of that choice is based on the culture of organisations. And whilst we have that evolving need around customers and preferences, and we're focused on ESG, a really rich source of talent, of course, is women in leadership. And that will be the key point I'm going to be talking about today. In some ways, the requirements of our customers have come full circle, in that the need for automation and technology, of course, are hugely prevalent, but also the need for good quality individual personal service is of utmost importance as we continue on. So the global position of women in insurance is interesting, in that when we look at women around the globe, we know we have the rising incomes, increased buying power. But again, we know that financial inclusion is an issue for both genders. And I think the statistic here is around some innovative market segmentation, particularly focused around women. in terms of the $1.7 trillion opportunity for us, with some market segmentation focused around this topic, or certainly putting some spotlight. When we turn that into taking a look at the comparison across the globe, and we look at how the footprint looks with regards to female executive, with regards to the makeup of committees around the world, we can see that there's still a lot of work to do. If we think about the fact that in some of our largest operating countries, we are seeing a real decline in the qualification numbers of underwriters. Certainly here in the UK, we're seeing that. We've only got 22,000 in total. And again, as we move around the world, we see that the gaps move and contract around female leadership. So historically, we know that there have been barriers for women into the section. We know that, of course, not everybody considers when they're hiring or promoting the best person for the job. We also know that benevolence bias is significant when we talk about our female colleagues. And what I mean by benevolence bias is we think we're being kind sometimes, not offering opportunity or a demanding task or the opportunity to travel or a particularly stressful assignment because we think we're being kind. We know that often women take the primary role in caring, for example, and therefore why would we want to add that additional layer of stress to their lives? When in fact, that decision is not kind at all or benevolent. We're just being hugely discriminatory. When we think about the fact that we are offering up secondments or special projects or the opportunity for exposure to some of those areas that are not typically available to female, we start to see that we can add the portfolio to be able to challenge. And again, when we think about our male colleagues, and just to be clear, I am by no means a feminist. I believe that every female should compete for success alongside, but within a level playing field. It's important that men don't feel threatened by women. I hear this comment quite often in terms of the fact that from male colleagues who say my career is now in jeopardy, because of the fact that if I'm not diverse, I don't progress. And there's no need for that threat. Again, we hope that our male allies will celebrate women and absolutely support and challenge for the best people for the roles. We hope, of course, that our male colleagues will share that office housework, taking those notes, making the coffee, organising the events, all of those key things that traditionally have fallen to our female colleagues. And when we think more broadly around this, getting comfortable with being uncomfortable, my aim around this topic is that we stop talking about diverse talent and we focus on what talent is included to create the biggest impact. The day we stop having to use the word diversity, and I know that's emotive, is the day that we're making some progress. So when we start to think about innovation, and particularly focusing on female as we are today, there are many, many advantages to us to increase our representation of female leaders within our business. But also when we think about the attitudes to risk, and we think about the improved innovation and the diversity of thought, and we think about that increased patience and understanding with our customers and our employees, it makes very clear financial sense. I don't need to cite to you some examples of the risk profile, of course, on key decisions and why diversity of thought is absolutely critical. I've been handling a case this week with a development bank which is government funded, that has made a hugely discriminatory decision with no information to back it up. And again, that has caused significant impact to a whole range of people. So the beauty of a diverse representation to innovation is in all of these ways. And again, is it all about what men can do to support female? No, of course it's not. In the coaching that I do, gender bias is actually hugely important to all different genders. And again, we should be mindful that we're not just talking about male and female when we talk about gender identity. It's important, of course, that we recognise that as we move forward, female can actually pose barriers for themselves. And if we start and think about the fact that some key statistics around gender bias exist, things like that senior level women are twice as likely as senior level men to spend time on this topic, even though it falls outside of their day-to-day activity. We know that men are 10 times less likely to be asked about their weaknesses in an interview compared to a female. My background was in professional sport, and one of the statistics I love is that in 80% of cases, men are asked about their sporting interests, but women aren't. And again, these are the things that start to create some division and divide, of course. I find the statistic around a female's weight fascinating and the impact on their salary, or the fact that actually we reduce the amount of time that we spend interviewing our female colleagues. Now, I've had the pleasure of coaching some very, very impressive female candidates, and the barriers that are put in place for themselves are really important to be overcome. Removing that comparison of ourselves with others, exhausting ourselves trying to be perfect. We're working in an agile world where 80% has to be good enough. It can be very lonely as a female leader, and sometimes that can create toxicity in female and the inability to support others. Again, the kinds of things that we don't need to see are to have to be networking 24/7, to work 24/7 to impress other people. We feel we have to be that voice of feminism. These are all key barriers. Again, I see this manifest itself in simple things around the topics that are championed by female in business, and some basics in terms of how we see and interpret a job advertisement or a promotion opportunity compared to male colleagues can be huge barriers. If we were to ask the average male executive for clarity on what their next steps were or how they progressed, they'd be very clear. But the majority of female that I work with are much less able to articulate that. We see the hard ass approach. We see those individuals who feel they've got to be alpha male to succeed in this topic. And again, of course, when we talk about pay parity, a very emotive topic, it's not okay for us to accept being paid less. So some of the things that can help levelling this playing field to unleash that innovation and remove the barriers are very simple. We create formal and informal sponsorship opportunities. We know that across industries, women are 21% less likely to be promoted than men. When we add into that a further intersection of Black women, that increases to 40% less likely to be promoted. So again, we need to be levelling this playing field. We need to create formal and informal sponsorship opportunities. And you're probably aware that the likes of HSBC, for example, are offering a showcase for each of their vacancies. So that as opposed to producing a job description or a person specification, there's a short video from the actual hiring manager bringing the role to life and being really clear about what the job involves. It's increased application of diverse candidates dramatically as a result of that very simple change. Addressing bias at a much deeper level, focusing on awareness of bias, not theoretical knowledge, is incredibly helpful in terms of a step we can take. Showcasing women leaders within our organisations, if they're comfortable to do so. A lot of people don't want to be the poster child. We don't want to be seen as different. And again, tracking some key metrics. Data is helpful to us if used in the right way, of course, to look at where we are in this topic. And then to demonstrate that we are trying to remove that diversity focus. So demonstrating that whilst gender diversity is a top priority, the right people for the job in the right places are much more important. So to summarise, if there's one takeaway from today, from this session, I hope that it's our attitude to diverse talent is to offer inclusive environments to everybody, so that regardless of our difference, we can progress, we can excel, we can provide innovation and ultimately impact the EBITDA line of all of our businesses. It's been a pleasure to be with you. If there are any questions, I'll respond to them after the session. And I'd like to thank you very much for giving me the time to be with you here today.
Here at InsureTalk, we really try to keep things interesting. I don't want to say that we've kept the best for last, because we've really had some fascinating speakers today, but we've definitely kept the most interesting topic for last. The next speaker and the last speaker for the day is Ildiko Richardson. She's a director at Blue Anchor Risk Services. And she is going to talk to us about cannabis and the insurance industry. And just, you know, I can't wait to hear what this is all about. But let me tell you a little bit about Ildiko first. Ildiko has been in the insurance industry since 1987, starting her career at Mutual and Federal. And moving to a brokerage. From there, she went on to specialist liability underwriters. It used to be SRU before it became SHA. I also still remember those days. She started her first UMA in 2001 and was instrumental in bringing the first environmental underwriting company to South Africa. She has once again identified a market sector that requires niche covers and underwriting methodologies in response to the changes in legislation to the previously illegal cannabis industry. So Ildiko is going to talk to us about this today on this topic. But I think something else that I want to mention is that Blue Anchor Risk Services is also an event partner for us here at InsureTalk today. And again, we are here because we have sponsorship support from the market. So we thank you very much. And we hope our viewers find this topic really interesting.
Good morning, everyone. Let me just set up my screen for you. Just 1 minute. I need to find my thing. Hold on. Let me just do this. InsureTalk. Won't find my notes, my other screen. Good morning, everyone. Welcome. And first of all, a big happy birthday to Christelle and a happy 3rd anniversary to InsureTalk.
It seems to be quite apt that we are following on from Women in Insurance and Breaking Barriers. And here I'd like to just mention that if anyone has any questions during or after our presentation, please pop them into the Q&A area so we can revert as best we can. Why are we saying it's apt that we're following on from Women in Insurance? Well, just a quick few points on the cannabis plants, specifically the medicinal cannabis plants. Well, it's all about the ladies. From the mother plants, well, no males needed, to the cloned female plants that go into flower, unpollinated, of course. And then, of course, the plants are cared for and trimmed by, yep, you guessed it, the ladies. And why? Well, they have greater dexterity and they have been found to be much more nurturing with the plant. And last but not least, the product that is available in the South African market in terms of cannabis insurance was developed by, you guessed it, two ladies. So today we will be looking at the history of cannabis, the legal and regulatory framework currently governing the cannabis industry both locally and worldwide, what constitutes cannabis, what constitutes a pharmaceutical product, mature markets and how are they approaching the industry, and can we actually learn from it? So cannabis has been part of the human society for thousands of years, with many countries acknowledging its medicinal qualities and healing potential. Throughout ancient China, India, Africa, Southwest Asia, Afghanistan, and beyond, people have used cannabis to aid all sorts of ailments like insomnia, headaches, indigestion, lack of appetite. Cannabis has remained an important remedial herb throughout the Middle Ages. And thanks to the English botanist William Turner, he sang the praises of the cannabis plant in a publication issued in 1538 called A New Herbal. During the 2 centuries that followed, cannabis was common in medicine. By the late 19th century, patented tinctures, extracts were available at many apothecaries and pharmacies, and more than 100 studies have been conducted in cannabis. But while it was accepted as a medicinal supplement, cannabis was not used recreationally in the United States. So why and how did this ancient medicine become so vilified? It is not until the 20th century that cannabis turns from a medicinal herb to a considered dangerous drug and becomes ruthlessly prosecuted. After the Mexican Revolution in the 1910s, many Mexicans migrated to the US and brought cannabis with them. In Mexico, during this time, smoking cannabis for its non-medicinal and mind-soothing properties was much more common than it was in the United States. American politicians who opposed the immigration vilified cannabis and the Mexican Americans who smoked it, often referring to the plant as loco weed, and by its Spanish name, we all know it as marijuana. With these crude, cruel nicknames came far worse racist stereotyping. And if one believes some of the stories and some of the conspiracy theories, it also had to do with powerful people who controlled the modern industries of paper and pharmaceuticals. So it was also about the controlling of the bad influence of migrants over young, vulnerable societies. In South Africa, cannabis was prohibited when it slowed migrant workers down. This was in the 1870s. And then in 1908 to 1922, local regulations criminalized the possession of addictive substances. 1925 to 1950, internationally outlawed cannabis and eradication programs effectively enforced these laws. So it took approximately 50 years to criminalize and ban a plant that had been used for medicine and recreation for over 3,000 years. But by 1986, renewed interest in the cannabis properties to treat cancer came to the fore. Whilst California was the first state to ban marijuana in 1913, they also became the first US state to legalize medicinal cannabis in 1996. a 180-degree swing in just 83 years. And Canada became the first country to adopt a system of regulating the use of medicinal cannabis. Closer to home, in 2000, the advocacy for legalization of cannabis happened in the city of Cape Town with a walk. And in 2009, the Dagga Party was founded to promote the rights of cannabis to be the same as those of alcohol and tobacco. We then move on to the 2018, which led to a constitutional court judgment that led to the local decriminalization of personal use of the cannabis plant by an adult in private. We'll deal with this in a little bit more detail as we go along. So this gets us to the current legislative and regulatory framework that now deals with cannabis. So we've now dealt with a little bit of the history so that you guys have just got an understanding of where this plant has come from through the ages. So in South Africa, we are a signatory to the UN 1961 Single Convention on Narcotic Drugs, the 1971 Convention on Psychotropic Substances, and the 1988 Convention against the illicit traffic in narcotics and psychotropic drugs. Cannabis is still classified under Schedules 1 and 4 in these international laws. So it is subject to special restrictions. Our legislation makes provision for meeting the strict controls, and our regulatory framework allows for procedures, controls, specifications, and enabling of medical research, as well as giving access for cultivation, as well as the licensing of suitable commercial activities. Here we identify the two main laws in South Africa that deal specifically with our local approach within the cannabis space. The first one is the Drugs and Drug Trafficking Act 140 of 1992. And two, the Medicines and Related Substances Act 101 of 1965. But in 2017 through to 2018, 3 individuals separately challenged the constitutionality of certain provisions of the Drug Act and Medicines Act in the High Court. And on the basis that these provisions violate the right to privacy as contained in Section 14 of the South African Constitution. And since the challenge related to the same issue, the High Court elected to consolidate the matters. At the High Court, the provisions of the Drug Act that prohibits the use and cultivation of cannabis by an adult in private for personal consumption was declared unconstitutional. The provision of the Medicine Act that criminalizes the use and possession of cannabis by an adult in private for personal consumption was also declared unconstitutional. The High Court found that the legislative provisions unjustifiably limited the right to privacy. The unconstitutionality applied only to the extent that the provisions prohibit the use, possession, or cultivation of cannabis by an adult person in private for personal consumption in a private dwelling, i.e. at home. Then the order came down and it referred it to the constitutional course for affirmation, as is required. At the constitutional level, a unanimous judgment was ultimately agreed, and it agreed with the High Court judgment. However, and interestingly so, the court removed the High Court's limitation on the use, possession of, or cultivation of cannabis, which is restricted to one's home or private dwelling. The court held that the right to privacy extend beyond the boundaries of the home, and the requirements that use, possession, or cultivation must be private remains. The cannabis judgment effectively means that adult persons are now permitted to use, possess, and cultivate cannabis in a private space for personal consumption. The court found that the criminalization of cannabis and its history was characterized by racism, and that many indigenous South Africans use cannabis. The court also found that the alleged harm of cannabis was not as severe as historically argued. It also makes little sense to allow the use and possession of alcohol and and tobacco, but also criminalize cannabis. The court has called upon the legislature to effect certain changes to the Drug Act and the Medicines Act to align with the legislation and the outcome of the cannabis judgment. This was done in May 2020, which we'll also deal with a little later. So following on from this cannabis judgment, the gazetted changes were made in Notice 586 of the Government Gazette 433/47 on the 22nd of May 2020. These changes are the responsibility of SAHPRA. The cannabis plant was removed from the SAHPRA Schedule 7, which is illicit substances, but THC, being the psychoactive ingredient, remains Schedule 6. Cannabis remains a prohibited drug in terms of the Drug Trafficking Act, and this means that local commercial sale and consumption of THC high product is still illegal. The Department of Health and SAHPRA are under an obligation to establish efficient, accountable, and transparent systems for the oversight of supply chain, prioritizing public health and safety, and minimizing the diversion of all controlled substances, of which cannabis is one. Whilst the 2018 Constitutional Court ruling and subsequent May 2020 promulgation in the Government Gazette, this created the opportunity for Blue Anchor to delve into the specialist industry, and one still has to remain aware that many activities or operational businesses may still face challenges within the ancillary laws until they are amended. And I'm going to give you some examples of these. Local bank and financing and in the investment in a cannabis business is still subject to the Drugs and Drug Trafficking Act and the Prevention of Organized Crime Act. The hemp fiber sector, where applications are made for building and construction marine, are subject to the National Building Regulation, as well as the boat building industry regulations. Animal feed and pet food from hemp or cannabis are subject to Feeds and Pet Food Bill. Fertilizers, Farm Feeds, Agricultural Remedies, and Stock Remedies Act. CBD containing food, beverages, cosmetics, and personal care are subject to the Foodstuffs, Cosmetic and Disinfectants Act, Schedules of Agricultural Product Standards Act, Drugs and Drug Trafficking Act, and local cannabis and hemp seed registration and supply are subject to the Agricultural Pests Act. So one can clearly see that even though certain changes have been made to our regulation and our law, there are many alternative regulations and acts that still control and manage and make illegal the cannabis industry. And if you're not aware of where you sit or your client's products sit within this framework, as an insurer, you may very well be endorsing illegal activities. And that goes against the principles of insurance, that you may not actually insure an illegal activity. So now that we have a very basic understanding of our laws and regulations and how they may interface with our insurance industry, we need to pay closer attention to the categories or classes of cannabinoids and where we could possibly fit them into our mainstream insurance products. The international markets have split natural cannabinoids into three distinct and separate categories. Medicinal pharmaceutical, being the flower with high THC compounds, isolates, formulations, and pharma ingredients. Wellness and nutraceuticals, which are CBD, less than 20 grams a day. CBN, used in pain relief, like in things like multiple sclerosis, cancer, arthritis, epilepsy, and the treating of opioid addictions. And industrial hemp, which has the commercial and industrial products, including rope, textiles, clothing, shoes, paper, bioplastic insulations, and biofuels. Considering this, in conjunction with all the activities that are permitted and those that are still considered borderline or gray activities, and still considering the illegal activities due to other laws that have yet to be altered, one can see that underwriting these risks could quite possibly considered be like playing Russian roulette. The legislation, being in its infancy and consistently changing and adapting, one needs to ensure from an underwriting perspective what, how, and where these laws and regulations are changing. Also understanding the why specifically medicinal cannabis is being held to such a high standard and gives you a better idea and the ultimate impact on your insurance covers. Pharmaceuticals require consistent quality and quantity, and the only way to achieve this is by controlling imports. Cannabis grown in a strictly controlled environment stands a better chance of being the same than by trying to buy a baggie of weed from the guy who grows this in the middle of the city with unknown inputs. So taking an illegal product into mainstream commercial products comes with its own challenges. Effectively, as an illegal or illicit product supplier, there is no traceability and therefore no accountability. But the minute you enter into the legal or the real world, that comes with a huge risk of liability to both investors, shareholders, and the public at large. In terms of cannabis as defined by SAPRA, every aspect of the plant, from seed to harvest, is classified under the regulations of pharmaceuticals. Proliferation of CBD-contained products on the market, claiming to treat various ailments, claiming low THC and low CBD, using logos, cartoons, and pictorials are considered to be illegal and being distributed without regulatory oversight and often unverified contents. So from a product's perspective and from an insurer's perspective, we need to be very, very cognizant of the fact of what our clients are doing and how they are doing it within this framework. So how have the mature markets handled cannabis in terms of insurance products? Well, we're talking about the USA and the Canadian markets. They have a general exclusion with variations to facilitate this. They even go on to exclude things like UVB and UVA exposure under the general premises liability. Now, one would then ask, why? Well, cannabis grown commercially has high UVA and UVB lights. Now, as a surveyor or a loss adjuster, you may be going into these, or as a buyer, you may be going into these facilities, and you will be exposed to these high concentrations of UVB and UVA lights. Without the correct equipment or the correct protection, you may very well be exposed to cancer-causing light. That is why the mature markets have introduced these specific exceptions. The US standard markets have a similar concept to standardizing our wording, like what we used to have with the multi-mark type wordings. And the difference is here, they need to be registered in every single site. They are known as ISO wordings or Insurance Service Office policies. The cannabis endorsements clearly exclude cover for cannabis activities and ensures that they are if they are undeclared or not underwritten, then businesses do not provide the cover. So there's no way of slipping these businesses into just the general policy without the exclusions applying. It is then important for the brokers to identify that their clients are dealing or working within this sector, and then they ask for the exceptions to be either removed, and that means that they then go to a specialist underwriter within the space of the cannabis industry. It's all about understanding the risks and ensuring the client and insurers give and get what was declared. Unlike here in South Africa, where everybody seems to think that because they've either tried to or have grown weed at home, they now believe they are experts. Well, the guys have been growing it in a legal space, and the mature markets have been very circumspect in offering insurance products.
Whilst Canadian markets offer selective covers and even reinsure operations via the Lloyd's syndicates, the covers are basic. In the US, there are over 10,000 growers and only 5 active insurers offering cannabis insurance cover to the sectors. Now, considering that in South Africa, we only have 86 current licenses, and I can guarantee you that just about every insurer has a cannabis client in some form or another on their books, does make you think. We have seen some interesting business descriptions, from seedlings to hydroponics to cannabis. But no, they're not pharmaceuticals according to the descriptors in the broking notes. Now that one considers the law and everything you know about growing cannabis, and knowing that cannabis growing in South Africa is pharmaceutical until proven otherwise, is it not time that we then look very carefully at how we are underwriting these products? Cannabis business can't survive without goods and services like insurance. But in the current market wordings, we do not cater for the crossover of assets versus crop. The market very, very specifically deals with these as separate insurance spaces. And each traditional sector has specific treaties. Because the current wordings don't specifically address the cannabis market, because the markets don't currently deal with cannabis market needs, it creates large gaps for the clients that could be devastating should a loss occur, had that specific aspect not been addressed. Traditional liability treaties also don't have a pharmaceutical products cover. They have specific exclusions. And as seen in the regulatory framework, there are many gray areas and direct applications that could negate the prediction of the treaty if incorrectly applied. So just to give everyone a bit of a change of scenery, I'm not sure if you've noticed all our subliminal weed pics. Why the famous, infamous Titanic picture? Well, as an industry, we don't always notice how big the iceberg is. What you see on the surface is not always what you need to be aware of. And let's be honest, our industry is not known for being quick to change direction, but also a few things that have happened in the month of April in history that affected the industry. In the 12th and 13th of April, 1912, the Titanic hit the iceberg and sank. On the 13th of April, 2022, the Durban floods, considered to be the most catastrophic, hit the province. But it still wasn't the largest. That was in April 1856, when 303 mils of rain fell in a 24-hour period, and over 691 mils over a 3-day period. Then on the 20th of April, 2010, Deepwater Horizon happened in the Gulf of Mexico. It was the BP drilling rig explosion, killing 11 people, and had a fireball visible for 64 kilometers. And that caused the largest marine spill in history. But today being the April the 20th, or 420, 420 has a special meaning in the cannabis industry. It's a slang term or code word for marijuana and marijuana use. It also refers to the cannabis culture and an annual event held on the 20th of April in the USA that celebrates marijuana. The origin of 420 can be traced back to a group of teenagers in California who met to smoke marijuana around 420 in the 1970s. Just a little bit of interest. And my last slide, for whatever reason, doesn't seem to pop up. And let me see if I can find it for you. It just deals with the amount of change that is constantly, click on that one, maybe. Just click on it. Okay, I'm not sure. I don't know why it doesn't do that. Take it away. No, it still doesn't. Just go back to it quickly. Sorry about this, people. No. It goes to 13, doesn't go past that one. Sorry, I have no idea why it doesn't do that, but I'm just going to pop this one up quickly and take myself away. Basically, it's that the global regulatory shifts are towards the acceptance of cannabis and hemp, and the general direction of regulation is towards more openness of cannabis and hemp production. Cannabis regulation changes within medicinal cannabis are also expanding into responsible adult use. And within the month of April, we have had so much change in the EU, it's just unbelievable. But the pace of change is unpredictable, and it has been slower than the industry expected. Please feel free to contact us via our LinkedIn page of Blue Anchor, and have a look at our website page being www.barrisks.co.za. We definitely try and keep up with regulation as best we can. We read potentially anywhere between 5 and 20 articles a week to try and keep ourselves up to date with the regulation changes and the changes in the various territories that our clients in South Africa are exporting to. So if there's nothing else from our side, we're done, and I think we're in time. Thank you very much for the hosts, and once again, happy anniversary InsureTalk, and happy birthday week to Christelle.
Ildiko, thank you so much for that. I just want to make a correction. It's Blue Anchor Risk Solutions. We appreciate your support. And I just want to say, what fascinating times do we live in? We're attending an insurance conference, a virtual insurance conference, talking about artificial intelligence, cannabis in the insurance landscape, digital innovation. It is just, it's just mind-blowing how fascinating and interesting our industry has become. So thank you so much for that insightful talk. And I think you are making a lot of people think about how cannabis is changing the way we do things in our industry, in our economy, and the opportunities that come out of that. So this brings us to the end of today's session. As I mentioned, it is our birthday session. We are going to go away and celebrate a little bit today because it's in our world a great achievement, but it's worth nothing if we don't have people attending our event. So I would like to end off today by saying thank you to you, the viewers, the ones who tune in every single month, support us, engage in the chat, engage with us online, and we appreciate you. On this day that we celebrate our success, we want to say we are only as successful as your support. So thank you very much.